guarantee you we're going to bring the energy, we're going to bring the fun, and we're definitely going to bring a lot of insight. My panel is here. I'm super excited. All right, I guess we'll just shake it up.
Do you want to sit by your picture, Moatti?
We'll play a little musical chairs. And while we're doing that, for those of you who don't know who I am, my name is Brian Sparks. I'm the CEO of Silicon Valley Venture. I'm also the host of Silicon Valley Impact. How many of you have heard about Silicon Valley Impact? Okay, there's going to be that day where this is completely blank. Silicon Valley Impact, we're in over 26 countries, and I get the privilege of interviewing great people like we have here today. I'm also the head of strategic ventures at Stack Ventures over in Oakland. So if you haven't been there yet, you got to come on over. But again, this hour is not about me. It's about you and a great panel that we have today. And in the spirit of Silicon Valley Impact, I'm going to let my panel do their intro, talk about what's top of mind for them. And what we're going to focus on is really, what is the investment strategy with all this AI going on, this growth, this boom? Does it change what we do? Do we listen to the noise? Do we stay with the traditional investment strategies? What do we do? So without further ado, SC, I'm going to let you do your intro. One of my favorite people, by the way. SC, go ahead.
Thanks, Brian, and great to be on stage with you again. Everyone, great to be here. Love seeing such a great international crowd of entrepreneurs. SC Moatti, I'm the founder and managing partner of Moatti Capital. We invest in enterprise software at the Series A stage. Some of our portfolio companies include Amplitude, DigitalOcean, Netscope, Grok, Angle, Canela. What's unique about Moatti Capital is that when we invest in a company, we bring a massive global platform of 500,000 product managers that essentially buy the technology of a lot of our portfolio companies. What's top of mind today for me when it comes to AI, I think to Akash, the previous speaker's point, it's completely changing the value chain for investing. It's completely changing the return profile and the funding life cycle. And so I'm thinking about what that means for our firm in terms of how we continue to generate returns for our own investors, how we build the talent pool that we need to get to be successful in this paradigm shift.
I love it. Very nice. John, you're up. Give us a little intro about what you're working on.
Yeah, so I'm John. Great to be back here. I was here, I think, last year at STEP. So one of the partners at Khosla Ventures, and I tend to look at more technical things and get interested in things with a tech edge. So some of the companies I work with or invested in are things like Sakana AI or like Cognition. And Khosla as a firm, I think we probably have a little bit of a reputation of deep tech stuff, but we do things like Square, DoorDash, or these days a lot of people know us for doing the seed round of OpenAI. But yeah, I'm an operator by background, and great to be back here.
Thank you, John. Eric, you're up, buddy.
I'm a partner at Scale Venture Partners. I personally focus on tools for technical builders. I like to write like a $15 million check is typical. As a fund, we do kind of A and B rounds generally in B2B products. And pretty excited about AI at the moment.
All right, Alan, you're up, buddy.
So my name's Alan Taylor. I work for a global organization called Endeavor. We focus on amazing entrepreneurs in emerging markets, so outside the United States. I'm the founder and managing partner of a venture fund we built at Endeavor now over the last 14 years called Endeavor Catalyst. We have made about 300 investments all over the world. So far, Series A and B, like my friend Eric here. And so far, 63 of those have grown up to be billion-dollar companies. So we're trying to prove that you can build a really big, amazing business elsewhere.
Okay, all right. So let's dive right into it. So for those of you, again, in the audience, I'm going to ask a few questions here. We're going to go back and forth. But at some point, if you have a question, I'm going to bring the mic to you. And so definitely ask your questions, but I have two rules, and let this sink in. Number one, the question, I have to be able to repeat it. So your question needs to be repeatable. And number two, no pitching. All right, no pitching.
It has to be a question?
It has to actually be a question, yeah. So real quick, just to kind of get us in the zone, we're going to be talking about models and agents, and we're going to be talking about applications. Oh my, all those things. But why do we still do this? What is it that you're working on now? What is it in the changes that are happening that you love about this game of investment? And what are you optimistic about? So what do you love about it, and what are you most optimistic about? SC, I'll start with you.
So what I love about it, before being an investor, I was an entrepreneur, product manager myself, early at Meta, Electronic Arts, and so on. I love innovation. Right now, I've been in Silicon Valley for a little over 20 years. It's one of the best times to be here because the speed, the energy, the excitement, the opportunity. So that's what I love about what I do. What I see ahead, I think is really like this idea of what we call a paradigm shift. What happens is after COVID or after the zero interest rate period, essentially the traditional flow of money completely changed, and now there's a lot of money that's stuck in venture capital and in private equity. So that creates sort of a squeeze. And at the same time, you have a massive wave of innovation, which requires a lot of energy, but also for some size a massive amount of capital. And so when you have kind of a squeeze and an explosion, as you can imagine, right, creates a lot of pressure. That essentially is what a paradigm shift feels like. I think that's the very exciting thing.
Yeah, that's the exciting part. John, again, what's there to be excited about? What do you love about what's happening and what you're working on?
It's actually a funny question because I was having this conversation yesterday with one of my partners, and it was like, in our KV6, our Fund 6, we have OpenAI and Commonwealth Fusion. You have AI and fusion energy. Like, what else is there, right? So, like, what's the point of all this investing? Which is kind of an interesting joke. But for me, it's really just like I like technology. I started coding professionally here back in 2011 at Palantir. Like back then, engineering was not like a career you did for money because there was no money in the space. So it's just fun. So I just love technology. And honestly, like when I joined KV, I didn't think I'd be an investor. Vinod was trying to actually pitch me on starting another company. And the only reason I didn't was I had a 1-year-old, and I was like, it's kind of insane doing like startup hours and also having a kid. So then he's kind of like, all right, do investing instead. You can live vicariously through people. So at the end of the day, for me, it's just technology is cool, and I love tech.
I love it. All right, Eric, same question to you.
I'm in the change business. Like if the world doesn't change, there's nothing for me to do. And the world is changing more now than ever, and it's super exciting. I think one change is in particular is kind of cool. The early part of AI, before we had the foundation models, you had to have like PhDs, you had to have a bunch of data, a bunch of money in order to do a startup. But in the last 3 years, that's all changed. Anybody can build something brand new. They don't have to be an expert in anything. They don't have to have any proprietary data, and it can take off and grow so fast. We're seeing it all the time. So I think it's pretty exciting, democratized time to build a giant company.
Alan.
Well, we got technology, we got change, we got a lot of good themes. I guess I will add that the person I've kind of learned the venture business from, and the chairman of our fund is Reid Hoffman, who was at Greylock for a long time. He's the co-founder of LinkedIn. And what Reid told me when we were starting a VC fund was, hey, look, venture it's not easy at all, but it's not that complicated. It's not that complex. You only have to do two things. First, you have to be contrarian, and then you have to be right. And you have to do it in that order, by the way, to create real alpha and be successful. And so for me, the contrarian part of my work and our thesis is this deep, fundamental, profound belief that there's amazing entrepreneurs everywhere in the world. And I love the idea that we've been working for 15 years on something that is still pretty contrarian, right? A lot of people in the room would raise their hand and say, no, you have to move to San Francisco to build a big company. But I think in the fullness of time, we're going to be right. We're going to show that you can build really big, amazing companies everywhere. And I like that challenge and that provocation.
Ooh, so what I heard is just go around kicking the hornet's nest is what I'm hearing. Maybe not that extreme. But I want to ask really quick, and we'll come back to that because I got that look. I saw the look. I want to ask how many founders are in the room? Okay, all right, we're loaded. And I know some of you are thinking about becoming founders, have exits experience. So I want to ask our panel, here's where we get to really geek out, and that's on strategy. We have all this change happening. We have all of this technology booming. Things are moving quicker. Does it change the way that we invest? Does it change the fact that a company needs to consistently look fundable in the same way that it always has? Does the founding team need to be, have that founder fit? Does it stay the same, or is it changing? Essie, I'm gonna start with you.
I think it completely changes how venture capitalists go about their business. Akash, in his presentation just before us, described it from the entrepreneur standpoint. I'll describe it from our standpoint as venture capitalists. And it's true particularly for serial entrepreneurs. When you start a company today, you don't need a pre-seed round. So you skip directly to a seed round. And because you don't need to set up your architecture. You don't need a seed round that's really big. Even you may not need one at all, because you can get some early proof of concepts, paid pilots that allow you to operate, about break even. And so when you get to the Series A stage, which is where we invest, you are not diluted at all. And you don't necessarily need to raise a massive round of funding, because what you're trying to do is say, can I scale? So you need enough money to reach like a solid cash flow break even point, which is what we provide. So it's sort of in between a seed and a Series A. We call it a discovery round. Once you've proven that you can reach cash flow break even, then as a serial entrepreneur, you have optionality. You can decide that I have a shot at an IPO, and so I'm going to go raise massive amounts of funding from some of the old brands in the Valley or elsewhere to go all the way. Or you can decide, well, I'm going to exit, and one of the benefits that we provide at Moatti Capital is we give you access to chief product officers who can buy your business. And so within 2 to 3 years, you can have a quick exit, or in our terms, you can have a quick return. That was not possible before, and it's completely changing the alphabet soup of having to raise Series A, B, C, which for a lot of entrepreneurs is not the fun part of building the business. I think there's a lot of that disruption that's happening. It's also happening at massive speed. So as an entrepreneur, you can build to sell in about 3 years. And because the AI innovation cycle, we think is going to be pretty long, you could do that like 2 or 3 times and maybe make more money than if you went all the way to IPO. So a lot of entrepreneurs are asking themselves that question. Do I do it 3 times with short exits, or do I go 1 time with a potential for IPO? Changing a lot of things.
Yeah, so I want to also let you know why I'm asking this question for the founders and those of you who are interested in the strategy of funding. Is if you're raising, you want to know who your potential investors are just as much as you want them to know who you are. So hearing this and what their strategy is allows you to empathize and then speak to those points. Because as a founder, you want to pick your investor wisely. It's just not a money grab. It's hearing insights like this to see if it's a fit for you. I mean, I often look, okay, is the founder fit right? But you want to make sure there's an investor fit. So as we kind of move down, keep that in mind in terms of empathizing with the investor when you are raising. So John, same question to you. With technology booming, with things moving quicker, does it change the strategy and the way that you approach this?
Some things change. A lot of things stay the same. So at the end of the day, right? Like there's a lot of this like, oh my God, GPT wrappers, ChatGPT is going to kill all the startups and whatnot. And at the end of the day, it's like, no, actually, this doesn't matter. Everything stays the same here. At the end of the day, you want to get to moats. And historically, the way this works is you have some technology advantage. It buys you time. That's it. It's just time. Now, like back then, VMware's technology advantage got it like 20 years or like 12 years. Today, that might actually get you 1 year, right? But the point is it buys you time. And you leverage that time into some moat that is interesting and allows you to build a generational company. Qualifying that with like, a lot of investors are different. At Khosla, we're pretty much decacorn hunters. So we're looking at, can this be a generational company? Can you get to $1 billion of gross margin? And it doesn't really matter if you're a GPT wrapper or not. If you have some advantage that gets you to a moat, then you kind of get there. Things that have changed a little bit, like I think, at least when I came to Silicon Valley, and like a lot of Paul Graham's essays and whatnot will talk about how ideas don't matter, or like you can just ignore what Fang does and just execute. And these days, I think that's a little bit more false than it used to be in the past. Because back then, I was actually there. Back then in 2010 and 2011, very few people knew how to code. Today, like everyone knows how to, you can vibe code. So like, just because you can code something and run fast, if there's 30 other people doing the same thing, that thing's getting commoditized to zero, right? So you can't just have the assumption ideas and insights are cheap. And at the same time, like you also can't just ignore Fang or like the Mag 7, because especially in AI world, they actually care. Like the advice is ignore them because they generally won't do what you're trying to do. But if you're trying to do like, I get this pitch a lot, which is like, oh, I'm doing some like video model, and I'm like a PhD researcher at Berkeley. I have some interesting algo and papers, and it's like better than what Google has. And it's like, great. Why does that matter? Google is actually working on this. They actually care. And the thing that makes you win is like that giant money printing machine they have in the background to buy GPUs, because GPUs are going to kill your algo every time, right? So like you can't actually ignore what Mag 7 is doing if you're playing in their arena, because these days you actually are playing in their arena in a lot of cases.
Eric, yeah.
Yeah, great comments. I agree with all those. Certainly the game has changed in terms of the mechanics of how you get funding, at what stage. The big picture, as John said, is still the same. I'm really interested in big markets with founders who have a different perspective, a unique perspective and insight on that market. And then eventually, I'm optimistic that there's some strategy that makes it hard for other people to compete in that market. The way we talk about those things is really different because the competitive landscape just feels really different than it was before. And so I'm excited about founders who are thinking ahead and can kind of find a unique perspective on how they can lock out others on competition. And I think being creative there, it goes a long way today.
Oh, I love that question. So Alan, before we double click on some of the specifics of competitive strategies, what's your view? Is strategy changing or is it staying the same? And feel free to kick the hornet's nest.
Well, so I think since we touched a few things that are changing, maybe I'll double down on two things that are not changing. The number one is, I believe very fundamentally that company building, entrepreneurship, and venture is a people business. Right? So I think it still is going to be about people and human beings. It's still going to be about founders and this idea of founder market fit, of sort of being able to really articulate, why this, why you, and why now. And a bunch of the stuff in the why now may be related to new technologies and things that are changing, but I think fundamentally still incredible, remarkable individuals start and build companies and are this kind of gravitational force that, attracts people around them to come and build it. So I think that doesn't change. I think that's the same. And the corollary to that, the second point is, I still think the real winners, like the big, great, enduring companies, will rely on just an unbelievable amount of resilience in those founders, in those human beings, to like do things for 5, 10, 15 years. This is the average overnight success story is like 10 or 15 years in the making. So yes, technology right now is enabling us to build companies faster, but I think really big companies basically have to survive so much shit that goes wrong that like resilience in the founders and the team is still going to be a really fundamental attribute. And so that's something we look for sure in founders. Like everybody's pretty smart and has a good idea. I think you have to be resilient.
Yeah.
SC, I saw you light up. Go ahead.
I want to add something to the great points that were made. I think that the winners of this new AI era will be built differently than during the SaaS era. During the SaaS era, you had a few mega winners like the Salesforce and the names we know. And then if you were not one of those handful of winners, your way to success was to build essentially a feature that they wanted to buy, right? So a horizontal that then got acquired by the behemoth. I believe that in this era we're in, the way, if you're not one of the handful of winners, which some of them are starting to emerge, the way that you play your card as an entrepreneur is more vertical, right? The previous presentation, which was so great, was talking about how data sets, unique insights in AI are sort of some of the ways you create a moat, which means that for entrepreneurs today who are building, it's less about the horizontal feature, because that's really, to your point, and that's very easy to replicate and commoditize. It's more about the very niche vertical insight. So that's a different strategic play, I think.
The one warning there is on verticals. The bitter lesson is true, so you need to be careful of whether or not you will get overrun by more general intelligence.
So Eric, I'm going to bring this full circle to you. We're talking a little bit about that level of competition. How do you stand out? Double click on that. What have you seen from early stage founders to position themselves well for the market as they head out into the wild?
I was hoping someone else was going to figure this out for me. We've long talked about, like, is there a data advantage? And AI feels like it should have one, and it's been a strange couple of years where there hasn't really been one. Fine tuning never quite worked, and people have gotten really far off the foundation models and the prompts. But I think it's inevitable that there will be, as we verticalize these products, that having kind of vertical experience, vertical database, data sets, and feedback from users in your domain is going to play a role. I think we're seeing a little bit of that in the reinforcement learning, fine-tuning. Feels like it's showing us a path to that. But I think that could unlock a real competitive edge for people where if I get users, experts in a certain domain using AI for my domain, I'm not going to, like, maybe OpenAI or Google might not compete there as well.
So the strategy as you go to market in terms of partnerships becomes a little more complex. Is that what I hear you saying?
Sure.
Okay. So what's next then? So we're hearing that, the strategy is changing. Some things aren't. How are we looking at, and this may be the same question, just formed a little bit different. If we have a startup coming to you, what are the top 3 things that they can really focus on in terms of going to market, building their team, pitching to you that shows that they're fundable? So that high-level takeaway for our audience to think about, okay, well, bottom line, I need to be fundable. How can they take that with them? Where do we begin with that?
So the answer to that, I want to say, is not exactly relevant to just AI companies, although most companies right now are AI companies. What we see happen post sort of that COVID era is that the go-to-market of any tech company is completely changed. The traditional channels like cold calling or email or the product-led channels are not working as well as they were. A lot of people have been playing on LinkedIn channel to get early go-to-market validation. That's also starting to fade. And so where we see entrepreneurs really stand out is when they're thinking really carefully about their early go-to-market, and particularly when they think of community-enabled or ecosystem driven go-to-market strategies. That's sort of in general, whether it's AI or whether it's not AI. Now, in terms of the segments where we see some traction or have some interest right now, I think of technology innovation generally go in sort of 3 big waves. The first one is, you can think about it as like a mind, right? So you have to figure out a big problem that nobody could solve before. That's the early stages of AI, like a deep mind from IBM. Then you go with user experience, or what you'd call like a body issue, and that's the era we're in. OpenAI and these tools are so easy to use. That's what differentiates them. Where we're looking at innovation next is the third kind of wave, which is all about personalization. And that kind of relates to my earlier point about vertical, but defining personalization, having a clear vision for, I'm going to build a product that's personalized, leveraging the latest AI capability. That is where really we see a lot of great entrepreneurs stand out.
So John, before I pass this question to you and also to Eric and Alan, whenever I'm on my show, we take a little break, and at the intermission, I always ask my guests, hey, what would be a big win for you being here on the stage, meaning you have the platform to share with a lot of great people out there in the audience. What is it when it comes to the game that we're playing in that you really have to say at this point? Because I don't want my questions to guide it, but so much in terms of the fundability question, but what would be a really big win for you to share with the audience today? John, you want me to come back to you? Look, you're deep in thought on that one, buddy.
I don't have an answer. That is why I haven't thought about this. Well, I guess like the baseline would be if I have fun up here, which I'm having fun. So that's number one. Nice win would be like if some exceptional startup reaches out and something happens from that.
You want to find the winner? Just keeping it simple. I love it. John, everybody.
The decacorn is in the back row, 3 seats over, just so you guys can find him.
All right, Eric, same question to you. Big win, but yet, we still got that question there about fundability too, so you can leap in anywhere.
Big win. I'm a sucker for insights. Like if I learned something from one of you today that kind of was mind bending for me, particularly about a market or a user base that I didn't understand. I think I talked to somebody this morning who was like, apparently in Egypt, all e-commerce shipments happen through couriers, cash collected, and so that's all full of all kinds of problems I never thought about. So yeah, anything like that was like super interesting to me. The second piece was what, the fundability?
The fundability piece,
I think it's the same thing. I think I want a founder who who knows secrets about a market that nobody else knows, and that blows my mind.
I like it. Back to the founder fit. All right, Alan.
Okay, so I do have an answer to your question, because my goal anytime I sit on an investor panel is to try to help founders in the audience with this whole mystery of like, well, what are the investors really looking for, and how do you understand investors better? And so I'll try to provide some, maybe 1 minute of insight on that answers your question about fundability. I don't think there's any such thing as being generically fundable. I think it actually is about trying to find investor founder fit or investor company fit. And so doing a bunch of work as a founder on investor mapping and actually thinking not about the money, but about what else comes with it in terms of expertise or experience or networks. Everybody says, oh yeah, go raise smart capital, you should get smart capital. But smart capital is different things to different companies at different stages. And so I actually think trying to listen to podcasts and read blogs and talk to people and go meet people and think about like, who would I actually want to get to talk to every week or every month? Okay, that's the person I actually want to try to raise money from. And in these days, there's so much specialization in smaller firms. You can look at the firm itself. But then at the bigger firms, you really have to go to the partner level, to the person, and figure out that's the person I want to raise money from. So I think a little bit of that concept of investor mapping to really try to determine, okay, who invests in my sector, in my stage, they're investing in things kind of adjacent and around what I'm interested in, so they clearly have some kind of prepared mind thesis around what I'm working on. The more we can help founders do that, the better. Because frankly, we waste a bunch of time, we do as investors and founders do, in kind of an inefficient marketplace where people are like, oh, I want to go pitch Andreessen Horowitz. You're like, well, whom within the partnership and why do you want to pitch them?
Yeah, that's a great question. My good friend Alicia Casillo, she was on the show, Silicon Valley Impact, again, another podcast you can listen to. But she once said, she's with Wealthing VC, she says, if money wasn't the issue, if you were trying, what is it for? So if you need money, ask yourself, what is it for? So that kind of goes to your point about what is it you're after, why do you want it? Is it just for the sake of having cash, but how is it going to be deployed? Is that
yeah, the most provocative way to say this, which is like partly true, is raising venture capital is not about the capital. If you take that seriously, you'll probably map out investors in a different way.
Okay, I'm going to ask one more question to the panel, but I'm going to come to you. So if you have questions, again, I got to be able to repeat it and no pitching. I'm going to hand it to you. So go ahead and you can throw up the hands, but and I'll come to you first. But what else are we missing? Are there any gaps at this point? We asked about the win. What's next? The strategy. But is there any gaps in terms of how we share ideas and insights with those who are looking for capital or looking to build at this point? Anything top of mind that we maybe maybe we have a question that needs to be asked rather than having the answer. Is there anything that's untapped at this point?
If I could pile on that last comment,
Yeah.
I get asked all the time, what does it take to raise a Series A? Like, what is the profile of a Series A company? Going back to that fundability, and it's just the hardest question and kind of most meaningless question to answer. Because I see companies that have, they have the million, the 2 million, they have a high growth rate, and we don't do them all the time. It's not like certain metrics equate to like doing a deal. It's more that, and there's plenty of companies who reach those levels and then don't amount to anything. So it's a perspective, as you said, of the investor believes for some reason that this thing defies all those norms and it's going to keep going, and that belief stands outside the metrics. It's like another thing that can't really be articulated in the metrics as easily.
John, go for it.
The easiest way to sum all of this up, actually, is that at every round, for every investor, what we are looking for is something exceptional. Because the average startup dies. Actually, like the 90th percentile startup usually dies too. So what you're looking for is something exceptional. Because if you don't have something exceptional, you aren't going to be an exception. And if you're not an exception, you're not going to succeed.
Tell me more about that, John, because I don't know a founder in the audience right now that's going, I'm out, I'm not exceptional. What does that mean? Like when exceptional needs to be just kind of like, okay, that's what I need to raise it to. Give me an example or some sort of takeaway.
It can be many things. Well, I'll give you two examples. So one of them was a company I invested in where, I mean, you guys probably know of it, called Cognition, where there were like 36 IOI medals across the 10 people in the company. It's like pretty damn exceptional. And yes, Scott is better at math than I am when he was like 12. So that's one. Another one would be like this founder I bet, where he was a seed company and he already had all of Hollywood behind him, backing him. I can't name the company because they don't want to be named yet. Like all of Hollywood was like, this is the one. And I'm like, you have like $5 billion in the bank and been around for like 3 months. How the hell did you get these conversations? And then, 2 months later, Disney came to the table. So it's like, that's exceptional.
Go ahead, Essie.
I can give a variant answer to that. When I got to Silicon Valley, I'm originally from Paris, from France. When I moved here, one of my biggest realizations is you're surrounded with people who all want to be that exceptional founder or investor. And so the transformation for me to understand what that meant was, well, if I'm my best self, right, the top 1% of what I can be, then I get a shot at being that exceptional founder, investor, professional. And that really kind of helped me see how the lens of startup and technology success.
I like it. Okay, now to our audience. I'll come to you second. I'm going to come down here and get the mic. Go ahead. And give your name, too.
Yeah, sure. Thanks a lot. I'm Stan, and I'm founder of Valpi. And first of all, thank you, everyone, for these really valuable insights. But I remember the question should be repeatable. So let me give maybe one comment and then the question. So that's, yeah. SC, thanks. You've pointed out, to the next step, which is the personalization and that stuff. And I wanted to elaborate a little bit more with you guys on what is coming next, because what we see as the biggest issue is not in the technology, it's the, dumbness of users, really. That's using AI is a skill on its own, so bridging that gap feels like the next big thing. But you may have different opinions, so. Yeah, really good.
Essie?
Yeah, so that's a great question. Thank you. When I think of what is personalization, and I know it's a little bit abstract, but I think of it as two key things. One is identity, and then two is context, right? Knowing that it's me, not John, not Alan, right? And with my own set of intricacies, and that I'm here. That's how you can create, as an entrepreneur, a personalized experience. So now take that information and think, okay, so now if I use the power of an AI, to harvest that, what can I create? And of course, I give you like the super simple example because we're talking in such abstract terms. So I made it about like a consumer in a place. But the same principles apply to B2B, to regulated environments. So if you can understand how you harness an AI on top of high personalization in a hyper precise context, then you can really maybe make some progress. Hope that helps.
Great. And I really encourage you all to ask follow-up questions after the panel, but thank you very much. Go ahead.
Thanks, Brian. Hi, my name is Tim Taylor. Thank you so much for the panel. I'm curious, from the four of you, to what extent do you reveal yourself personally when you are talking to startups, and how, if at all, do you value authentic personal connection in the course of investing?
All right. From the best-dressed man in the building, go ahead.
Well, I can start. I mean, my answer is a lot because I put it out there. I think it's a people business, so I think the human connection matters a heck of a lot. I also think that if we're trying to figure out what makes a great founder, a bunch of these things, yes, it's about the idea and the market and all these things, but on the people level, it is sort of these concepts of somebody who has radical self-belief, like who believes deeply in himself or herself, but also deep, real intellectual curiosity, right? Like doesn't think they know all the answers. And so I think you only get there by being curious and authentic yourself. And I think most people who are good at venture would probably give you a similar answer, but maybe these guys will give you a radically different one.
So you're saying that you don't have to have all the answers, but you have to have the capacity to go after it.
Look, the best entrepreneurs are learning machines, right? So they're actually really curious. They don't think they know everything already. They want to keep learning. I think by the time you're 35 or 45, this manifests as humility. I've met very few humble 25-year-olds. So I think at 25, we're looking for intellectual curiosity because it's very unlikely to manifest as humility, but not knowing everything is an important trait of a founder.
I love what Ray Dalio says. He says the three characteristics he looks for is being hungry, humble, and smart. So that fits right in line with that. Go ahead.
Hi there, Brian. Thanks a lot. I'm Brian. It's 2030. Some young hotshots have come in and totally disrupted the VC model. What did they do then that you should have been doing now?
Well, shit, if we knew the answer, we should be doing it and not up here on stage.
There's been a bit of a trend around when you think of a VC firm, you think of like a partnership and you think of a group of people. Part of that's because they need to attract capital from but solo VCs are increasingly popular. We've seen some big firms people have been peeling off to go solo on a fund. I could see that being, the future of venture capital is kind of like a celebrity solo business.
All right, I think we have time for one more question. I'm really enjoying my Maury Povich moment, but here we go, last question.
All right, hey, thanks so much, Rishi Jaluria. Really appreciate the panel. Just a pretty simple question for you. If we think about cutting through the hype, when you look at these companies that are scaling like never before, how are you differentiating between which companies have real recurring sticky ARR versus those that are maybe more fleeting and experimental ERR? Thanks.
This is pretty easy. It's retention and defensibility. If you don't have retention, it doesn't really matter what your growth is. And if you don't have defensibility, otherwise known as a moat, then it is very likely it will get commoditized to zero.
I think Essie, go ahead. So yes, and we are living in a world where there's a ton of sort of experimental AI spend going on, right? Where lots of big companies are spending money on things because they had a board meeting and they said, you have to do something about AI. What are we doing? So within that framework, I think trying to figure out what is the spend that's still going to be here in 2 or 3 years, even if the retention's really good right now, because we are going to live through this era into another era. I mean, I'm old enough to remember when every VC put on their website that they invested in this category called mobile. And then, of course, like every business became mobile, right? Every business will be AI, right? We won't have panels with names like this in 2030, I don't think, because it'll just be implied and obvious that artificial intelligence as a part of every single business we build. So, I think that's one thing you got to pay attention to because of the moment we're living in.
Love it. SC?
Yeah, quick add-on. It's not about the tech like AI. It's about how you bake it into your product to create value. It's not about the sales growth. It's about, to your point, how you create engagement to drive the growth of your revenue. It's not about like timing. It's about how you constantly keep an edge, right, and look at like what's going on in the ecosystem to make it like a systematic competitive advantage to move faster. So those are some of the things that we look at more than just the numbers.
All right, so we are at time. I definitely want to thank the panel, so please put your hands together for a great panel. I want to thank STEP San Francisco for this great event, great opportunity, and I hope you all are enjoying the time. Thank you very much. This event, or this panel, will be on Silicon Valley Impact next week, so check it out on Apple and Spotify. Take care, everybody.